Market recap for the last week of January from Monday 26th all the way to the 30th of January on Friday 2026. I couldn't do daily recaps this week because I was elsewhere, but we're still gonna put them up. So let's start with Monday's price action, right? The overall bias for this week was bullish, right? Because we left all these relative equal highs, as you can see, the two smooth, right? And then after that, we're either expecting a retracement or coming all the way back down and acting like this area is accumulation, then manipulation up here, and then distribution. So until we reach these highs, I'm bullish, right? So that's how we start with Monday. In terms of discount, there's nothing on the daily that I can see for a discount. So I went to the 4 hour, right? And then I can see these low resistance liquidity runs. There's a wick, which was a balanced price range in the lower time frame. However, this is not a balanced price range no more after we reached our target down here. So we're just gonna measure the wick, right? We get the lower quadrant that price went to the tick, and then opened up, right? So the market opens up, goes to the lower quadrant right here, takes all the sell side, and then resume higher. That's bullish. If we go to the 15-minute, we can see that after that we go in London, shoots down again, takes liquidity, manipulates by visiting the new weekly opening gap at the time, right? Low, and then expands higher. And then we can see that we have an SMT right here with ES, right? Within this manipulation for London. So just knowing what I know for Monday that does this, like from all the times I've seen, this type of Monday will most likely open up at 9:30 and just keep going higher, right? And let me show you what I mean by that. And my trade on my combine, because I don't trade Mondays unless I know exactly what it will do, then I wouldn't mind trading on a combine. So you can see we can go all the way to new weekly opening gap and then start heading higher, all the way waiting for 9:30, right? And this is typical for a 9:30 that will just open and go, right? And then for this day I have two relative equal highs before our main target, which is right there, that I would expect price to reach for today. So if 9:30 opens up and it still shows no interest of going lower, which it shouldn't, then I'll just keep buying every retracement, and that's what I did. So if we let price run for a bit, don't do this. This might just ruin the recap already because you know what? I'll just skip the whole day. I'll skip today. Alright, and I'll just show in like the lower time frame because the recap can be buggy. Anyway, 9:30, we have a slight Judo, right? We just take these relative equal lows, push higher, okay? To me, I just want to see no interest of price going low after that. And you can see the first presented fair value gap here, comes get respected, then goes higher. And from here, every time it goes down, I'm buying, right? This wick down, I bought that, I bought that, I bought this. Then it hits this target, it wasn't enough for my TP, so I take it out. Once we go down here again, we take this low, right? I think it was an SMT, it's relative equal lows. Right, regardless, on the move down, I buy it until I buy, I keep adding to the position until we reach the target, right? This is typical for this Monday. As long it shows so many signs that it might go down, it might revisit lows, it'll just never do that until like maybe final hour macro, right? So I kept taking the longs, until I got the target, right? 1.5k for like the combine. That's it for this Monday. That's why you don't trade it. It's garbage price action normally, but it will just keep pressing higher and higher, right? In terms of final hour micro, it's gonna keep doing this. Is this gonna work? Nope. Let's skip the whole day again. Just do 1 hour, 1 hour, 1 hour. Alright. This is probably gonna be a long video, but it's useful. In terms of final hour micro, did we have it today? You know what? I wouldn't even trade final hour micro for it. That was it for the Monday, right? Just don't care what else it does, right? Just know it keeps pressing higher, and then in the final hours, it'll have a slight retracement like it done today. I mean, like it done on this Monday, but there was no clear trade to go lower. I mean, there is if you really were trying to push for it, but it's not as the best point of entry. Regardless, that's the Monday. Either skip it, or if you have just a combine that you don't care about, just keep buying. Every time it keeps going lower, just keep buying. More time, just skip it. Tuesday, right? So if we just skip to the whole day of Tuesday, and you just jump one more day. Alright. Did it do it? Alright, so we have Tuesday's price action. So let's just go back. Again, remember where our target is, the relative equal highs. And before the relative equal highs, there's also, of course, other highs. I'll just put in the highest high. So you would have this as like your take profit, let's say for example, for Tuesday. Oh, that's the magnet for price. You need to aim for that direction. Okay, so let's explain Tuesday's price action real quick. Again, we need to jump back on the daily. As we can see, that Monday closed really bullish, right? In terms of discount, we'd be looking at this wick, right? If price even went for it, and as you can see, that price didn't, so we'll just go to the 4 hour, right? Price opens up, makes a bullish 4 hour fair value gap, right? So we're just gonna have that marked again, same thing, right? If you can't find anything exact, go for the 8th. You can see we went all the way to the 0.125, slightly shooting past it. It's almost an immediate rebalance, but it keeps a portion open. What does that mean? It's bullish. So this comes down at 6, so London or after London. So we're just going to check that in the lower time frame. We're going to go to the 15-minute. This 6 candle, no, 6 closes at 10. So this wick, right? So when we have this wick, we just want to, like, the market structure in itself, we can see it left an obvious 15-minute gap, right? Which in terms, all of this is the 4 hour gap. And then we just want to mark out discount, right? I'd prefer, I wouldn't say this was the cleanest day, right? But as long as the draw is obvious, there is a trade to be taken, right? So we go to discount or the range, right? We do take relative equal lows down here. However, there wasn't any liquidity here. I would like an extra sweep before going higher, but price didn't do that because it was in a hurry to go higher. So in terms of liquidity, I'd just be pursuing this and maybe slightly higher in terms of TP, and knowing that the magnet for price is higher. So once we go in discount, and I believe it's a 9:30 Judah, yeah, we respect our 4 hour. Remember that the 0.125 was right here, right? There's no closures, and you can see it's 9:30. If we wanted to go lower, we'd keep respecting all of this and keep going lower. My last line defense of going lower would be the first presented fair value gap right here, which should be respected, and we should not go higher. I mean, we should not go higher than it if we're going to keep going lower. But as you can see, price opens with a Judah. And if we check regular trading hours, we can see that we go to the midpoint right there. That's why we go to that low exactly, right? So that's a confluence, right? If I'm aggressive, I would take this gap, right? Try and catch the inverse, which it hits. But I wasn't too confident of it trying to go higher yet. It could have another manipulation, it could have another wick. So I waited, and once we got above the first presented fair value gap, took the long, right, on a closing basis. Right, the first time it went for it, then it had the retracement. Then we go above midnight open. So this is a manipulation below midnight open. Imagine there's a wick, boom, enter the long, and I believe, what did I target other than this high? This is his TP1, and of course you could have this as TP2. I didn't hold for that long, but I'm just aiming for like just the max in of 1.5k. I believe this was enough, if I remember. I'm not trying to do the replay. Regardless, the trade is stop loss here, right? Order here, no drawdown, straight to GP. And this is, I believe, around 50 points, and I believe I let it just slightly higher because there was other highs regarding the buy side in terms of getting to our main target. And as you can see, after that, it's just technically just kind of a consolidation all the way until the target. Once we make relative equal highs, well, slightly target, there was a final hour macro for all these relative equal lows. This trade, which I also taken, I think, right here, was just waiting for us to hit the target. Best inverse. Of course, there's too many other confluences, but I do not have the time to explain to the T what was going on, right? Once we close below it, tag in, that's the trade, and then hold all the way to the gap, right? The first gap after the relative equal lows, which was right here, that was TP, and as you can see, we hit it at the end of the market. That's the market recap for Tuesday. And then as you can see, we're so bullish that we went and closed higher, which intel tells me that, right, Wednesday we're gonna have to hit that high, and then we're gonna need to do we're gonna need to add more PDRAs on the daily time frame. So let's just do another skip. Let's do Wednesday's price action. So on Wednesday I have two main things that I'm looking at: this gap on the daily and this order block, mean threshold, and the opening price. The opening price, I know that is next. Wait, let me just add this properly. Right, and the opening price I know is next to this, right? The higher the fair value gap, and the opening price that I know is at the higher the fair value gap, and the mean threshold is at the midpoint right here. So for Wednesday's price action, let's go back all the way to 9:30. Wednesday was FOMC, right? And when price goes above a fair value gap, technically filling it, and then start consolidating above it, I do expect it to go through it back again, right? And in this regard, let me just go to the 1 minute. The market opens at 9:30 here, and then we have this first inversion, right, that I'm looking at in the 15-minute. If I'm just gonna have highlight now, it's gonna press get messy. The first inversion at the 15-minute, it goes up into it at 9:30 again, offering it, and then starts going lower. The liquidity for the day, we had Asia, right, because price start up from Asia and then kept going higher and higher and higher and higher, right? So we have Asia lows, London lows, right? And the 7 a.m. lows. At 9:30, we open up and we just start dumping down. On Wednesday, I don't normally trade this. I wait for FOMC. As you can see, we already hit the targets. We already went to the new weekly opening gap. New daily opening gap for this day. And then we just made relative equal highs right here prior to FOMC, right? So this trade was just obvious. It was just, if we're gonna take the lows, we're gonna come back for the highs. If we're gonna go for the highs, we're gonna come to take the lows, right? So you can see that this gap, which is a balanced price range, lines up exactly at the midpoint of that daily CB. So once price reaches, and for FOMC, I typically wait for 254. For FOMC, I typically wait for 254, right? Or 250 at max. You can see the price went up 250 exactly. That's my time for entry. Hits the midpoint of this gap, I enter, and then I wait, right? Normally I go break even most of the time, but price was playing around for this day because there was earnings at 4, which I didn't know about. However, I know where it's gonna go, so it didn't matter that it came and visited my entry every time. As long as that buddies are not closing above midpoint, I'm not too worried about it. Eventually at 4, as you can see, in like 102 candles, here at 4, we hit the TP, we hit all the relative equal lows. I mean, this is just straightforward FOMC trade. There's nothing too much to it. In the New York session, it's just one run up to the highs. If you wanted to have a larger stop loss, but I didn't want to babysit the trade here, so I just took the FOMC trade to the lows. Again, if price went lower initially at 250 and hits, I believe this is I can't remember what discount exactly, but it hits something to the discount exactly, then I would have taken the long again back to these relative equal highs. Regardless of what it wants to do, we'll just get one side and then seek the other. It's two-stage delivery for FOMC. Alright, so now in terms of daily bias, we have reached our objectives. We filled the gap. We are respecting this order block, right? The mean threshold. And I know that we're wicking into it, but if we like look at the major of the bodies, if we use something like a 15 minute or something, or like an hourly, we're gonna be respecting the mean threshold, right? I know the 15 minute here is slightly above, but if we use something like the hourly or just high time frame, because remember this is on the daily, right? I would want like the 4 hour cannot close above the mean threshold, so let's just go above the 4 hour. Or if it has its own order block, right? As you can see, I did not even see that, but you can see that the 4 hour is not closing above the mean threshold. Really, there's just a slight mohawk there. Anyway, skipping to Thursday, it's price action, right? So now that we know that we're allowed to be bearish today, so let's just skip one more day. We're allowed to be bearish because we can either expect a retracement on this whole run, or we can expect just this whole run to be done, and this is accumulation, this is manipulation higher, and then we continue distributing lower. Okay, so let's open Thursday's price action. On Thursday, as we can see, let's just go to the 15 minute because I need to show what the market structure was before opening, right? We go all the way up, but we don't take this high, right? And then we start with this original consolidation slightly, and then we start with a 15 minute fair value gap, go lower, 15, go lower, 15, go lower. We're not taking the highs. This is typical of 9:30 is gonna open, and then we're gonna go. By going, I mean like there's just no entry. We got a target to go to, right? So the targets for this whole area was just some discount of this range, and once 9:30 opened up and just start shooting lower, I know I missed my AM session trade, right? There's nothing for me to take, right? Otherwise, that's just me breaking my rules, and I'm just chasing price, right? So we wick, we take this slight high, right? Well, we do take it on MNQ. I don't know how we didn't take it here. Yeah, we did actually take it just by like one tick, and then we just start zooming down, right? For me, this order block was not convincing for me as an entry, and then after that, price just starts shooting lower and lower, offering basically no entry for me personally, right? You could always enter aggressively if you wanted in any like gap, but for me, I was just content on waiting to see where it's gonna go and if it's gonna offer anything at the lunch session or the PM session. We come at the lunch session, right? Or basically the end of or London close 10:50. Starting of lunch session macro at 11:30, right? Which seeks liquidity, the first liquidity after 10. First liquidity after 10 is right here. We're gonna see relative equal highs. Okay, so that's my target, and it might not look like much, but this is a 200 run, right? So the price expanded a lot this day. 200 points is more than enough for me. So we go all the way to the new weekly opening gap, as you can see, and I'm just waiting post 1050 for any confluence of we're gonna come back higher and start visiting these highs, and I don't care for the rest of the day, right? We can see that we go all the way up. Normally in this run, we keep just visiting the first gap and go lower, go lower, go lower. This time we go all the way up, fill it, then come lower, right? Do we make an SMT? Yes, we do make an SMT at the lows. So that's one little extra confluence for me. And then we finally invest the gap right there. The last one that's holding price higher. Once we close above it right there, we wick into it. That's my buy. And it's just all the way up, right? I mean, let's explain slightly the run. We go up, right? We leave this area. We could have wick into it as a discount, offer this as a bullish order block, but we don't. We were bullish. We hold the consolidation, and then after we leave the consolidation right here, I'm looking at the midpoint of this original consolidation. We come into it to the midpoint and we start going higher, and then here's where I added into the position right there on this as a mitigation block, or like a slide breaker block if you want to see it that way. Regardless, it doesn't matter. Right here, another add, and then we hit the TP, and the TP was actually the midpoint of this gap, so right there. Once we hit that, we just basically start consolidating. We went lower and just consolidated for the day, right? You can see that we use it later on for the final hour micro to seek higher prices, right? Probably a discount or OTE of this whole range. Okay, so now that we have a clean Tuesday, this is one of my rules that I kind of negated. When we have a clean Tuesday, clean Wednesday, clean Thursday, typically the Friday will be garbage, right? Typically, especially if the Thursday was a large range day. Normally, allow the Thursday. If any day was a large range day, the next AM session is typically garbage, right? Sometimes it's not, but typically it's garbage, right? And that was my mistake for this week. So I played Monday clean, I played Tuesday clean, I played Wednesday clean, and I played Thursday clean. However, Friday is my first loss for the week, and let's just explain it. So now let's just get rid of all this extra mess on the chart, right? I'll still keep these for the higher prices. Right, next day, Friday. Right, so Friday is the 50-50 day, right? Because we we again we could go back and we could still be bullish, or we could continue keep going lower. So this high has to be intact, right? Because this was the OT of this range and we need to go lower, or this low needs to be intact at London because it's the OTE of this range and we need to go higher, right? So once we reach PPI right here, and PPI really does nothing to show us what the hell we're going to do. It's a 50-50, genuine 50-50. If we're looking at higher time frame, just like if we just go slightly to the 1 hour, for example, we can see that we're respecting this, but my main eye was looking at this gap, right? This inverse, the highest one, right? If we're gonna overtake it, right? That's my main thing that I'm just using for this day, right? And you can see we're just chilling at the midpoint of it, right? We're not seeking to go any higher than the midpoint. We're making relative equal highs and stuff, but we're not we're not interested in really laying bodies above the midpoint, right? We just have a slight more hook here, but again, we're not convinced. So I was leaning more bearish. We had the PPI low. We also have relative equal lows right here. So that was my first TP, but I wanted to see that if we're gonna go to that low, we should be interested in at least London low, right? And because we have the new weekly opening gap, that's a draw on liquidity. So I'm expecting at least London low for today, and I'm content, right? So 9:30 opens up in this chop. I don't get chopped initially, right? I'm waiting, right? We make our first presented fair value gap right here at the time. That's what I had marked as the first presented fair value gap all the way to the volume imbalance. And then I'm just looking for price to just break out of this consolidation. Once it does here with this mini displacement, I'm like, all right, cool. I just want a closure below. We close below. I take my entry, right? Trying to target the midpoint of the first presented fair value gap. No, actually, no. I did an aggressive entry. I entered all the way at the volume imbalance, allowing for all of this, right? Typically, I don't leave my stop loss that high, but this day I left it all the way at the top of this gap, right? Allowing for breather room for a wick, right? We go up into it and then we go down, but I wasn't fast enough to reduce the stop or even put it at break even because my entry was slightly lower down here, and then we go into it and I take the loss, right? So that's just unlucky, but it could have been avoided. Like I outlined, that already coming at the market is looking like a 50-50, right? It's already looking like a 50-50, and it's just the price really hasn't displaced out of the range, right? So it's garbage price action, but eventually at 1050 macro, again, we respect this. First, technically, this is the first presented fair value gap. Now we go below the midpoint. We actually go close below it. Entry, bodies are respecting it, and then we slightly just tag the liquidity. Go back all the way to midnight open, and then go again lower, and then go all the way back. Right, we're breaking both bullish and bearish structures, and eventually at near PM session, right? PM session is about to start. We finally hit the new weekly opening gap, taking the low for London low. Garbage price action, genuine garbage price action, and I should have avoided the day because normally and typically after first a large range day, the morning session would be garbage, and I kind of expected that slightly, but I thought we'd leave it at 10. And then two, normally when there's a clean Tuesday, Thursday, and Wednesday, right? We're gonna have a garbage Friday. So that's the market recap. There's nothing much. I should have not taken the loss. I technically should be out of the market for this day, right? But we move and we learn. Next time that we have this typical clean Tuesday, clean Thursday, clean Wednesday, I'll just not participate in a Friday. But normally Fridays have been good to me. It's just because other days of the week, normally Monday and Tuesday would be garbage, and then But yeah, I couldn't went more detail to what I was looking at exactly, but there is no time. This video is probably as long as it's probably long enough. But yeah, I'm happy with my trading at the start of the week, all the way till Thursday. But Friday kind of ruined it. Of course, losses are expected, but you know, I'm just not happy that I took this loss because of what I know, right? It's not like the first time that this has happened, right? So again, I'm gonna add it to the notes, gonna improve, and eventually these days will be skipped because I'll expect them. Anyway, that's the market recap. Peace out.